Macro investor and Real Vision CEO Raoul Pal recently dropped his macro outlook amid the ongoing global economic meltdown. In a string of tweets, Pal explains that almost 40% of the world's GDP has been destroyed in the current macro environment. According to the macro guru, this presents a buying opportunity for the younger generation but does not bode well for the baby boomers, who will be left with some pretty difficult choices, especially if the housing market collapses. As he has explained in many of his interviews, Raoul Pal expects a long, drawn-out recession that will likely wipe billions of dollars off the markets. However, he believes it will present a buying opportunity in two sectors, the crypto and the tech sectors, as more younger investors look to avoid getting caught in the fallout. In this video, we are going to examine Raoul Pal's tweets on the current macro environment and what investors can expect. Please watch, share, and like this video, subscribe to the channel, and drop your comments and observations in the comment section below. Thanks, and enjoy the video. In some of Raoul Pal's latest tweets, the macro guru shares what he tags his not-so-fun macro thoughts, where he talks about inflation and its effect on the global economy. Here are the tweets. Fighting 8% consumer price index, call that the global average. We have destroyed so far 21% of global GDP in equity values, 10% of global GDP in bond values, 5% in other assets, and soon probably another 2 to 3% of GDP growth. That is a lot of wealth destruction, 36% of world GDP. We are near full COVID boom unwind and back to square one, slow growth and low inflation again. That is my best guess of all possible outcomes. My fear is for the baby boomers. At around 67 years old, they can't afford to lose this. In the fight to bring down inflation, the U.S. Federal Reserve, for instance, has embarked on quantitative tightening efforts to reduce its $9 trillion balance sheet. But this is being done on such a large and unprecedented scale that the previously ailing financial markets are now showing deeper signs of trouble. Younger generations still have more years to work and regain these losses, but the same cannot be said for the boomers, many of whom may now have to work longer to try to recoup their stock market losses and falling bond values. In his tweets, Pal notes that inflation would have been just as devastating for the older generation. Yet they couldn't afford the inflation too, Pal continues. If it persisted, which I don't believe it will, commodities might remain higher due to supply issues. But it is the year-over-year price changes that matter the most, and they won't persist to the same extent. For the younger generation, this is just another opportunity to acquire assets as discounts, especially if housing falls too and if they have the income. Likely a bit more pain to come too. And that means the Fed needs to eventually come back into play, which bails out the boomers again. Raoul Pal also rolls out a string of pretty difficult choices for boomers in light of the current macro environment. His tweet reads, "For the boomers, the choices are destroyed pension value or inflation, eroded annual pension payments, or quantitative easing to infinity. And that leads to more debts for those with low pensions or savings to offset this, which leads to the need to debase the debt via quantitative easing. And that screws anyone younger who just gets poorer in asset purchasing terms." You can clearly see as Raoul Pal goes full circle in his tweets. The economy was in trouble, so the central bank swooped in to save the day by pumping more dollars into the system. This sent prices skyward, then did a rethink and started pulling back the money even more quickly than they pumped it in, essentially creating more problems. Ironically, one viable solution, albeit a temporary fix, is a return to quantitative easing, which takes us back to where we started. In his tweet, Pal declares that young people are now left with two choices if they want to avoid the economic woes, one of which is the crypto sector. And that means young people either have to opt out entirely or take more risks, as crypto and tech are the only assets to have outperformed the debasement, but they are riskier and more volatile. But the regulators are trying to stop them from taking risks, which is a guarantee of them getting poorer over time, as real wage growth is 0.2% on average over the last 50 years. The only way out is negative real rates for 20-plus years, and that still comes with a price. That allows debts to reduce and assets to rise. But then the boomers get screwed as the value of fixed income coupons declines in real terms and they get poorer. In an earlier tweet, Pal also talks about a major indicator, the Purchasing Managers Index, which he believes will incentivize the Fed Reserve to switch back to rate cuts. My expectation is for ISM to hit or cross 50 next month or so, and that has historically given a 100% chance of Fed pause since 1972. Only 2015 was a pause, every single other time was a cut in rates. In another tweet, Pal predicts that we are in for a long ride with recession. The tweet reads, "It appears that we are possibly entering the December 2018 phase when stocks push lower, yields fall sharply, and commodities get killed and inflation expectations collapse. The only question remaining is a short, sharp recession, like 1974, or a long, drawn-out one. I think the former. The crypto market is full of amazing opportunities for investors and traders that know how to utilize the industry's best tools. Whether the market is completely in the red or prices are going off the charts, there is always a way for savvy traders to make money. 3 Commas is a platform that provides savvy crypto traders with tools to centralize their operations in one easy-to-navigate and carefully designed interface. 3 Commas helps crypto traders maximize profits, minimize risks, and limit losses on multiple exchanges. This platform has many exciting features that can help you successfully navigate the crypto market regardless of market conditions. You can autonomously follow the trades of experienced traders via signals or use the Smart Trade terminal to trade on and manage multiple exchange accounts using one convenient interface. 3 Commas features the best trading bots, so you can trade or buy cryptocurrencies at the best prices even while sleeping. The best part: 3 Commas is offering a 3-day full access for everyone who follows the link in the description box below. You also get an exclusive 50% discount when you purchase your first monthly Pro subscription. 50% off, and you can enjoy the best trading experience with lots of amazing features on 3 Commas. Please follow the link below to get started.